Assalamualaikum, I'm Nohafika. I will presenting the introduction part. Here are the 5 articles that our group already summarized. In 1979, the first international conference on Islamic economics was held in Mecca, Saudi Arabia. More than 200 Islamic jurists and economists attend the conference. They announcing all types of conventional insurance as unlawful. Takaful scheme was approved by OIC. Sudan was the first Takaful insurance and Muslim needs for Sharia compliant insurance. In Malaysia, the first act of Takaful was enacted in 1984. The conventional insurance that is totally prohibited by the Sharia because of these elements: interest riba, uncertainty, gharar, gambling, masyir. Takaful as Sharia compliant Islamic insurance product. Takaful involve individual charitable agreement tabarruk, contrary to the conventional insurance agreement that is a mutual agreement muwadat. The Takaful system a merge of social solidarity, cooperation, mutual risk sharing. The Takaful system falls under category of donation.
Literature Review by Shaza and Raha. Nico P. Schwartz and Peter Kozer found that the greatest challenges of the Islamic insurance Takaful was among the Muslim. They found that misconception among the general population of Muslim was one of the greatest obstacles in the way of practicing Takaful in multiracial countries. In Malaysia, Takaful product had attracted more non-Muslim customers as their awareness of Islam insurance was higher than Muslim, even the Muslim are majority in this country. Other challenges included the lack of development of banking institutions and the absence of supplying Takaful product in conventional markets. According to Hussein, 2016, the conventional insurance has some reservation under Islamic Sharia laws. The inclusion of riba, usury, gharar, uncertainty, and maisir gambling makes it permissible under Islamic philosophy. Siddiqui, 2004, defined usury as exploitative earnings made from a business activity. It is prohibited under Islamic philosophy. He said that the enumerated conventional insurance premiums are normally invested in fixed-term financial instruments which are permissible under Islamic philosophy due to the inclusion of usury.
Yusuf 1996 cited a number of reasons influencing the design and offerings of Takaful business. First, Muslims felt the need to practice Islam and apply its rules and regulations in total. Second, Muslims desire a financial system that is able to create a truly Islamic economy for the sake of the Ummah. Third, with the establishment of the Islamic banking system, an inherent need arose for Takaful or Islamic insurance to complement its services and offerings. It was the historical evidence that led Muslim jurists to acknowledge that the basis of shared responsibility in the system of Aqilah laid the foundation of mutual insurance, and in general conclude that insurance in Islam must be based on the principles of mutuality and cooperation. Muslim jurists' acceptance of insurance is outlined as follows. Number 1, the spirit of cooperation will lead to a common good. Number 2, the assistance is provided to those in need through the contributions. Number 3, that the donation of a small sum is intended to divide losses and spread liability according to the community pooling system. Number 4, All elements of uncertainty, gharar and mazi, will be eliminated through the contribution and composition offered. Lastly, number 5, there is no taking advantage of another at the cost of other individuals. For example, a fair scheme for all.
Next, the analysis from Safwan and Shazli. So throughout our observation on articles selected, a comparative study between Takaful insurance and conventional insurance have been published and extended over the years. The finding of study discovered how Takaful differs from the conventional insurance, which is such as the first one is concept. The clear concept of conventional insurance is that it is a system of collecting premiums from policyholders and investing them in interest-based activities, while Takaful is really opposite of that. In governing concept, Takaful principle mainly origin from the Quran and the practices of the Prophet, peace be upon him. So the second one is goals. The purpose of conventional insurance is to generate profits gain. Insurance firms conduct business in the interest of shareholders but often overlook their consumers' needs. Takaful, however, objective is consumer well-being and runs by earning minimal profit. In other words, the charge of premiums in Takaful is voluntary and therefore does not rely on individual financial income. The third one is risk transfer or sharing. Parties involved in sharing the risk in Takaful, it is because Takaful operations are based on mutual support concepts by which each contributor makes a donation to a fund. And the fourth one is ownership. The fund is controlled by an operator in Takaful, but the owners are the stakeholders in Takaful. They, however, have a full right of contribution and benefits. Under conventional insurance, however, account holders buy the company's policy. Equivalent such as we buy a product from a store where they have no right to determine the premiums or benefits.
As mentioned by researchers, concept of takaful exists from the empathy and compassion donations which have been established at pooling system in line with Sharia compliance and religious obligation, whereby it allows Muslims to evade any form of gharar, maisir and riba that is prohibited in Islam. The researchers have highlighted the greater potential of takaful industry in today's globalization. With more than 1.8 billion Muslim population over the world, takaful industry stands a bright future as far as business opportunities are concerned. Despite humongous figure in terms of Muslim population, the penetration rate of takaful insurance business pretty much lower in international market, in contrast to conventional insurance. The average growth percentage of takaful insurance is estimated around 14% compared to conventional insurance at 40% growth. It has been noticed that most researchers emphasize there is an inadequate understanding of Islamic finance in the banking and insurance world, which contributed to lower penetration rate. In addition, the findings also discovered that majority of people did not subscribe to any insurance due to stigma or perception towards conventional insurance as well as lack of knowledge about takaful products and services. We are in the opinion that it is vital for takaful operators all over the world to step forward to increase their market share and tap to those areas that have not been discovered. For instance, sustainability of pension schemes and retirement planning. There is a need to supplement and enhance the existing retirement product offering in the market, particularly the decumulation products to mitigate longevity risks. Given the lack of market penetration in many countries for family takaful, the need for retirement planning combined with an aging society will create an opportunity to grow the family takaful market in most jurisdictions.
Last but not least, conclusion part will be presented by Siti Zulaika. As a conclusion, we have concluded that there is a difference between conventional insurance and takaful insurance. Both of them are utilized in protecting event of unforeseen incidents. Therefore, contributor cooperatively will share the liability for any loss and damage that may befall on any member in the contract. Islamic Takaful also enable all Muslims to escape from gharar, maisir, and riba, where conventional insurance differ from Takaful insurance, where there is a sense of transfer of risk from the insured to the insurer.